The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Yes, we watch the mortgage market all the time for you, so you don't have to. What's happening in the market right now? Well, we did get the Freddie Mac numbers came out today. They come out every Thursday morning. Sometimes we want to see them, sometimes we don't. But I guess I should start with where we're at in the markets, as I do on a regular basis. S&P 500, I don't think my screen is showing correctly, so I'll grab that over here. S&P 500 down 28 points right now. Then let's take a look at the 10-year treasuries are up 2 basis points. Remember, when the bond goes up, the yield or the interest rate goes down. Bonds went up because we had a very bad auction yesterday. Nobody wanted to buy the bonds, which pushed the price down, yield up. Mortgage-backed securities are down 17 basis points today. But what does that mean when we're talking about interest rates? Well, first off, I'm going to tell you what the media is going to tell you. Media is going to tell you that Freddie Mac came out with their number today, 5.23%. 5.23% on a 30-year fixed rate loan. OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming rate, 5.508. Jumbo, 5.056. FHA, 5.35. Best loan on the market. The VA loan only for our veterans that qualify, 5.067, USDA 5.282. Why is it happening, though? What's driving these markets? Well, initial jobless claims measures individuals filing unemployment benefits for the very first time, reported at 229,000 claims for last week. This represents an increase of 27,000 from the previously revised report of 202,000 claims, and was above expectations of 210. Continuing claims remained at 1.306 million claims, which was just above the 1.305 estimate. We also are looking at housing numbers. A lot of the marketplaces, just from our own surveys, are showing that the housing numbers are continuing to grow, as far as there are still a lot of offers out there, not enough properties out there. So we're watching all of those things for you. We watch the number of reductions, European price reductions, which means that the properties are not selling as quickly, not as many bidding wars. The European Central Bank announced that they're going to finally hike rates by 0.25% next month. They're also going to end their quantitative easing or bond buying programs. We're going to keep their balance sheet same size so they continue reinvesting. Because the ECB is now finally starting to tighten, it is pressuring global yields. The German Bund, which was near 0.25% just a few months ago, has now moved up to almost 1.5%. Told you about initial jobless claims. Tomorrow we're going to get that CPI number I told you about a little bit earlier, that it was 0.7 12 months ago. Whatever the difference is between the 12-month number, 0.7 from 12 months ago, if it's higher than that, that means inflation is going to show up as being a little bit hotter. If it's lower than that, then you're going to hear the media jump up and down, all excited that the numbers are so much better than they were. That is the Real-Time Real Estate segment, brought to you by by Geneva Financial, our friends over there at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990.